Good morning, everyone. My name is Monica Villalpando. I am the compliance manager with CDOT. This morning we have a speaker with us today. Her name is Marla Nance, and it's my pleasure to introduce her. I had the pleasure of meeting Marla when we were first working on Central 70 together. Immediately we hit it off, and after an initial conversation about compliance, and since that time, it's been a great experience getting to know her both personally and professionally. She's a nationally known expert on compliance, and it's just very much a pleasure to have her with us today. Marla, take it away.
Thank you, Monica. Well, welcome everyone, and welcome to part one of our summer camp series. Now, many of you may have joined us for our general overview of civil rights compliance on CDOT projects. And if so, we're super happy to have you back to really take a deeper dive in through this summer series. Our single goal today is to walk you through the review of a certified payroll. We're going to be using a payroll review checklist. I know that Chessie sent this out earlier, along with a couple of other documents that we're going to be discussing, some guides that are available online. We're going to give you the links to those as well. You also should have gotten a like a slide deck where you can take some notes and everything of today's presentation. We'll be sending out then like a full view version of it later. And I know that Chessie's also recording today. But if for some reason you didn't get that, I believe Chessie was able to attach that to the to some documents to the presentation, or you can put in the chat and she can get that over to you, okay? Because we're going to be going line by line through the payroll review checklist, crosswalking that to a certified payroll, just so that you can see tangibly what is it that you're looking for when you're reviewing a payroll. So again, if you didn't get this, please shoot out a message and let us know, okay? So before we really get started going through the checklist, I do want to take a minute and kind of step back and recap a few items that we went over in our general training in regards to roles and responsibilities. So just a reminder that certified payroll reviews all start with both the prime contractor and subcontractors certifying and submitting the certified payrolls into LCPtracker for each of their covered employees on a weekly basis. So after submission, there are two levels of review for every single certified payroll. The prime contractor serves as the first level review as the prime approver. And CDOT requires each prime contractor to review the payroll submitted from all subs before approving them in the system. Now, if the prime identifies an error with the payroll, they can send a notice to the sub requesting a correction. And then once the payroll is in compliance, the prime approves, and then the payroll is submitted over to the project engineer. Now, the project engineer, for clarification, is defined in the specs, CDOT specs, and that really encompasses CDOT persons, local agency persons, or even a consultant that's been hired by CDOT or local agency to review the certified payroll. So today's training is focused on the project engineer role and the acceptance, because CDOT wants the prime contractor to go in, review those payrolls, make sure they're right, clean them up before they prime approve them and open them up to the project engineer's review. Now, then the Region Civil Rights Office, their role is to then randomly select payrolls to spot check the payroll data. I do want to point out in here that we've got it noted in red that payrolls should be reviewed weekly by the oversight. This is because contractors are required to submit payrolls weekly, so therefore the oversight review should really also be conducted weekly. Otherwise, if there is an issue and you've missed 1 week that's not been brought to the attention of the contractor, it could easily be repeated in the following week's submission, and then you've got this compounding effect. And trust me, it is a lot more work for everyone to have to backtrack and correct multiple payrolls versus just reviewing the payrolls in a timely manner and getting good feedback to everyone. So in recap, payroll reviews should be conducted on a weekly basis, okay? Now, on the certifications tab in LCPtracker, a weekly payroll is represented as a line item on the dashboard. So like the view you're seeing here actually shows 4 different payrolls that have been submitted. Now, in the approved column, you can see if the prime has prime approved the payroll and when. And in the accept status column, you can see the status of the project engineer oversight review. So again, if you're a local agency, that's you. This is your column. It tells you where you are on the payrolls, if you've accepted, rejected, or if you've got some impending status. So, and filters can be used to really quickly identify and group those statuses together for you to have a quick glance. So I want to talk a minute about what it really means to accept a payroll. And again, these are all things that we went over in the general overview, but I think it's really important to recap those before we take this deep dive into the certified payroll. There is a difference between accepting the payroll and reviewing the payroll. And I know you might think, well, shouldn't I review it before I accept it? Absolutely. And we're going to talk about what the minimum expectation is on that. But without a doubt, obviously, that's really what should happen. It's all about resources availability and your risk-based approach. So the project engineer must accept 100% of all payrolls that have been prime approved in the LCPtracker system. But prior to accepting the payroll, the project engineer should review the payrolls in detail. So the project engineer should review 100% of the first month of payroll submitted for each contractor. To accept the payroll, then you would click the drop-down menu in the accept status column and select accepted. If there are no issues with the payroll after reviewing that first month of payrolls, reviews can be reduced to 10% of each contractor's payroll submitted thereafter. Again, if you want to review 100%, that is completely your prerogative. The point here is you really want to make sure that the contractor is off to a good start, that they understand the reporting process, they understand how to report a compliant payroll. And then from a risk-based standpoint, you can back off a little bit. So, for example, if 4 payrolls are submitted by a contractor within a month, and this is after the first month, then the project engineer can review at least 10%, which would be one of the 4 payrolls. And then for that payroll, you're going to want to review everything on the payroll, all workers that are being reported. And regardless of how many payrolls have an in-depth review conducted, again, the project engineer must always still accept 100% of the payrolls in LCPtracker using that drop-down menu. And we call this the risk-based oversight approach. It is the reviewer's option as to how many payrolls are reviewed. This is just a minimum outline and a minimum expectation. If there are issues with the payrolls, the project engineer should select rejected in the drop-down menu. And then the project engineer should continue to review 100% of payrolls until the issues are resolved and the contractor is in compliance on their reporting. Now, hot off the press, CDOT has updated its payroll review checklist, and this is what was sent out to all of you this morning and should be available in the attachments on this presentation. This is also being posted in the LCPtracker templates. Now, this is set up for an oversight role. However, it's being posted to the templates out in LCPtracker because we want the contractors to see what we're reviewing in an oversight role, because really, they should be reviewing the same thing before they're prime approving the payroll. So it's a completely transparent process. We want everyone to understand what should be looked at. So today, we're going to walk you through this certified payroll checklist, and we're going to explain what each step means and what tangible action as the reviewer you should be taking to check off on each item. Now, this checklist is intended to be a guide that can be used by the oversight personnel to review a certified payroll. And when we have checklists, we often get the question, do we have to fill out this checklist for every single payroll that we review and accept? Well, the answer is no. This checklist is just a guide to help you remember what you should be looking for with each payroll. And in time, you know, when you become a superstar and a rock star at reviewing payrolls, you may not even need to have it in front of you when you're rechecking payroll. This is just to help you get the hang of what you're looking for and what to do. But absolutely, you can have it in front of you. If you feel better about filling it out when you first get started, that's totally up to you. But there is no expectation for the reviewer to keep these on file or to upload them anywhere, okay? Also want you to take note as we're going through line by line on the checklist that all of the checklist items are written as a positive statement. And this is with intention to tell the reviewer what the documentation should look like as a part of the review. And if as a part of applying that checklist item, your answer cannot be yes, your answer is no, then most likely you are in a situation where you should be rejecting that payroll, and that, along with any other issues, should be written up as a part of the rejection. And we're going to walk you through actually rejecting a payroll too. Now, it may be that if you answer no on the front end, it might warrant some additional research, and then maybe you're able to figure out you're able to actually answer yes to it. But anything with a no answer should prompt you that either you need to research and find out a little bit more information, or you should go ahead and reject the payroll and push it to the contractor's court to provide you with the information that you need to confidently accept that payroll. Okay. So there are 10 sections to the payroll review checklist. This includes contractor fringe benefit statement, timely submission, daily field activity, wage classifications, wage rates, deductions, independent contractors, on-the-job training, apprentices, accept, reject, certified payrolls, and resubmitted payrolls. And these are the 10 areas that we're going to walk through. One of the questions you may have is, how do I know what payrolls I need to review in LCPtracker? You know, we've got this great system. It's got all the payrolls in there, but how do I drill down on my dashboard to know what I need to take action on today? So again, we went over this in the general overview, but I just want to reiterate it to everyone that a reminder that the certifications tab in LCPtracker is your go-to tab. It's where you're going to live. And the accept status column belongs to the oversight and tells you the status of your reviews. So payrolls that have not been reviewed will be blank in this column. To filter the payrolls, you'll use the drop-down menu for the accept status right up above, and we've got an arrow pointed here for you to clearly see that. If you want to see all the payrolls that have not been accepted, you can unclick the checkbox beside accepted. And then you're going to see all the payrolls except those that have not been accepted. But now you can see that you may, if you got rejected, then you would need to unselect rejected too. So if you truly want to get down to the payrolls that you need to take action on, you would want to filter it so that you've unchecked accepted and the rejected in this filtering box. Okay. Now, also, there are two ways to review a payroll in LCPtracker. Obviously, you can click on the PDF button under the View CPR column, but you can also click on the Details button under the View Details, and we've got both of these highlighted for you here on the screen. By selecting the details, you'll see a list of all the lines on the payroll. We've given you an example here. At the bottom, you'll see it also totals not only the number of line items that are on the payroll, but the number of employees that have been reported. In this case, there are 6 lines, but only 4 employees reported, and that's because some employees are reported twice, like perhaps they're working in multiple classifications, and the contractor chose to report the time in each classification, which the contractor can absolutely do this, or they can choose to report all of the hours in the higher classification. But by selecting View to the far right, you can open up the details of that line. And then if you open up a line, then the system is going to automatically tag the line as audited. You can see here we've got an example where you've got yes under the audited column. And this is great because when it puts a yes, it makes it really super easy for you to see and remember like which lines you've looked at. So you may want to try both of these to see which one works for you. Personally, I like looking at the whole payroll holistically, but a lot of people like doing this. And you can even look at the payroll holistically in the PDF version. And then hop over here, and if you want to again tag which ones you've audited. So totally up to you. Just wanted to share with you these 2 options for viewing. So we've kind of got it set up, you know what your role is, you know how to drill down to what payrolls you should be reviewing. So I think we're ready to get started with looking at the checklist and really dissecting it, okay? So let's start with A1. So again, we've got the sections in the payroll review checklist. Hopefully you've got that open maybe on a secondary screen in front of you. You can follow along. But we've got each of the specific line items on the payroll checklist in a blue box on each one of the screens, okay? And also the header is letting you know which screen correlates to that specific checklist item so that you can go back. Because again, we're going to send you the full deck of slides and you also have it in the note version. So section A of the checklist starts with the contractor fringe benefit statement. And this is item A1 and states that the CFBS is fully completed. So LCPtracker requires the contractor to upload the CFBS into e-documents prior to the certification and submission of the first payroll. The system will not let the contractor certify and submit the payroll if this document is not uploaded. However, LCPtracker is not actually reviewing the CFBS for completeness and accuracy of what's being reported. That is the job of you as the reviewer. The CFBS tells the reviewer how the contractor pays its employees through cash or a combination of cash and fringe, and the types of fringe benefit plans if it uses those. So again, LCPtracker is just making sure there was an upload of a document. It is not reviewing the actual document. So the reviewer needs to make sure that the CFBS has been fully completed. If not, the payroll should be rejected and returned with an explanation that the CFBS needs to be properly completed. You might even want to expand your rejection comments to more specific details, but you see the point we're making here is that just to upload a document, it might get the payroll submitted, but it's not going to pass a payroll review. A2, under the CFBS section, states that the method or methods of compensation reported in CFBS Section B agrees with the methods of compensation reported on the Certified Payroll Statement of Compliance, Part 4, meaning cash only or a combination of cash and fringe benefits. So remember, there are two parts to a certified payroll. The first part is the wage and hour information itself. The second part is the statement of compliance, which is where the contractor certifies that the information being reported is true and accurate. And the statement of compliance says that it's true, it's accurate, and it's in compliance with the regulations and certified by a person with the authority to know that this information is accurate. If you see a certified payroll being signed by a project manager, you would want to question this, because depending on how that company is organized, on the surface, it would seem like a project manager might not really know the specific payroll information to report the accuracy of the certified payroll. So again, that's something to keep in mind, because the system does not only report the name, but also their role. One of the most frequently confusing items about the statement of compliance really is Section 4. So remember, on the wage decision, the minimum required rate may include cash, a cash component, and a fringe benefit component. Section 4 of the statement of compliance requires the contractor to communicate how fringes were paid to the reported workers. So first, you need to determine if the reported wage classifications actually include a fringe requirement on the wage decision. So in other words, when they're certifying and filling out this statement of compliance, it is unique to that specific payroll and those specific employees that are being reported. So if there's not a classification that requires fringes being reported, then there should not be any boxes marked in Section 4. But if it does, then the contractor needs to tell you how those fringes are being paid. Now, almost all of Colorado's wage classifications have a fringe requirement, but in some states they don't. So that's why I have to qualify this and say that it is specific to the actual classifications being reported for the folks on that payroll. But for the most part, every one of Colorado's classifications have that. So If the fringes were paid into a bona fide fringe benefit plan, then box 4A should be marked. If the fringes were only paid in cash, then box 4B should be marked. However, if the fringes were paid to workers in a combination of cash and bona fide fringe benefits, it is acceptable by CDOT for both box 4A and 4B to be marked. This may happen because not all employees being reported may be entitled to receive fringe benefits yet, depending on their position and maybe how long they've been with the company. But any exceptions to these scenarios should be reported in item 4C exceptions and then further explained. So I know that was a lot to share. So let's look at it a little bit more closely and give you some slides that you can refer back to when you're actually applying this. Again, we had said that if fringes are reported on the payroll, then box 4A should be marked. So remember that the gray area on the certified payroll line for an employee is where the hourly fringe benefit value is being reported. So if those boxes are filled out, then for that line item, that employee, they are receiving fringe benefits. And in that case, the contractor should have box 4A marked on the statement of compliance. Now, if fringes are not reported on the payroll and the employee was only paid in cash, then box 4B should be marked. And in this case, you can see that there was 0 fringes paid to this employee. But what about when you have more than one employee reported on the payroll, which is usually the case? And what if they're being paid using different methods? So you have a hybrid going on. You have a combination of some employees being paid cash and some being paid fringe. And this is where CDOT has said it is acceptable to mark both boxes 4A and 4B. So when you get your payroll and you're scanning all the employees on the payroll, you're looking to see, is everybody paid in cash, or is everybody paid using fringes, or do I have a combination? And that's then where you're going to go back to the statement of compliance and make sure that it was marked properly, because this is not an automatic marking by the system. The contractor has to tangibly decide how they're going to complete box section 4 on the statement of compliance. Okay. Moving on to item A3 on the checklist. In CFBS Section B, if the contractor responded that fringe benefits are provided in addition to cash wages, a company fringe benefit declaration worksheet or the CDOT fringe benefit declaration worksheet is on file in e-documents for the contractor. So this is an example of the CDOT fringe benefit declaration worksheet. It is an Excel spreadsheet that the contractor can use to report the fringes provided to each employee that is being reported on the certified payroll and is receiving fringe benefits that ultimately will be counted towards meeting the minimum wage requirement. So a contractor may have their own worksheet, and that's okay. Like the CFBS says, we're welcome to upload that into e-documents, but the worksheet must provide the same level of detail for each employee that shows the type of fringe benefits being counted, how the hourly value is being calculated, such as utilizing the annualization method, and the hourly value for each type of fringe benefit that then agrees with the hourly value being reported on the face of the certified payroll. So we do have an upcoming training class that is going to take an even way further dive into the contractor fringe benefit statement and fringe benefits. So if you haven't already, be sure to sign up for it. I believe it's May 23rd, but we're going to recap that at the end of the training today. So great information, much more detail. We're just really trying to dissect all these areas for you, so it hopefully is a little easier to comprehend the impact on certified payroll reporting. Now, item A4 says that only bona fide fringe benefits are reported on the fringe benefit declaration worksheet. So by regulation, only certain fringe benefits are considered to be bona fide fringe benefits and are actually eligible to be counted towards meeting the minimum wage requirement. So examples of bona fide fringe benefits are further described in the detail of the Department of Labor Field Operations Handbook, and examples included there. And we provided you with the reference for you to look at it yourself, but There's two different types of benefit plans. You've got funded and unfunded. So funded benefit plans would be like life, health insurance, dental, pension, 401k, contributions that the contractor is making to these plans on behalf of the employee. For unfunded benefit plans, examples would be vacation, sick, and holiday leave that is paid to the employee. The difference between a funded benefit and an unfunded benefit is a funded benefit is one, again, that the contractor is making monetary contributions to a plan on behalf of the employee to fund the benefit. Whereas an unfunded benefit, there is not necessarily a contribution to a plan, such as when the case of like a contractor is paying out vacation, sick, and holiday pay. There may be, but usually not, and therefore the contractor has to request USDOL approval for unfunded benefit plans. During this time, they're going to send all the information to USDOL, they review it, then they make that determination on whether the specifics of the plan will allow it to be approved for purposes of counting towards the meeting the minimum wage. So at the CDOT level, at the reviewer level, we're not reviewing these plans. They are required to then be sent to USDOL by the contractor for them to review and make that determination. Your job as the reviewer is to recognize that, hey, they're reporting an unfunded benefit plan, and I need to make sure that there's an approved USDOL letter on file and e-documents. That's your job as the reviewer. So some examples of items that are not considered bona fide fringe benefits, meaning that they cannot count towards meeting the minimum wage requirement. That includes deductions required by law, such as taxes, Social Security, workers' comp, or unemployment compensation, personal use of a company vehicle, holiday cash bonus or food item, suggestion awards, recruitment bonuses, tools and other materials or services incidental to the employee's performance of the contract, the cost of furnishing, laundering, maintaining uniforms or equipment where the contractor requires the employee to wear those items. Another example is cost of social functions, association dues, paid coffee breaks. These are just some examples to give you an idea of what is never going to be allowed to count towards that minimum required rate as a fringe benefit. A5, fringe benefits reported in CFBS sections C and D agree with the type of fringe benefits reported on the fringe benefit declaration worksheet. So in this section of the CFBS, the contractor is detailing out, they're telling you the types of benefits that they offer to the employees that they intend to count towards meeting the minimum wage requirement, and whether those are funded and unfunded. Again, for those that are unfunded, or they may even have some that are self-funded by the contractor. So in a self-funded situation, they're funding it internally. And so they're not sending or making a contribution to a third-party benefit plan. So in that case, self-funded falls in the same category as unfunded, and they have to get USDOL approval to count those toward as bona fide fringe benefits. And USDOL is the one reviewing those plan documents and making that determination. In A6, fringe benefits reported on the fringe benefit declaration worksheet agree with the type and hourly value reported on the certified payroll for the affected employee. So as explained earlier, whether the contractor uses their own fringe benefit declaration worksheet or CDOT's, they must communicate the specific fringe benefits for each employee reported on the payroll. And the hourly value calculation on the worksheet must agree with the reported value that you're seeing on the face of the certified payroll. Fringe benefits cannot be averaged across the contractor's workers. They must be reported for each employee and are specific to that particular employee, because some employees, for example, may be eligible or have elected different types of health insurance plans. So therefore, the premium being contributed may be different. So it is unique to each employee. Also, if one of the fringe benefits is paying holiday or sick leave or pay time off, that value is going to be calculated against that employee's specific hourly rate. So obviously that would be different across employees. So you can see in the example here, we've got an excerpt from an example declaration worksheet, and that number that you're seeing in the column for $1.80 should be the exact number that you're seeing that they've entered on that certified payroll for that section of the fringe benefits. And if it's not, then you need to be rejecting the payroll and explaining what the issue is so that the contractor can address it and make the appropriate corrections. A7, unfunded fringe benefit plans to include vacation, holiday, or sick leave or self-funded fringe benefit plans listed in CFBS Section D are supported by a USDOL approval letter in e-documents for the type of fringe benefit reported and has an approval date prior to the contractor's activity on the project. Again, this is clearly stating an action that you should be checking for when you're reviewing the payroll. And you should be looking for that USDOL approval letter over in e-documents. So in this slide right here, we've actually provided an example of a USDOL letter for a company that pays paid time off, vacation, and holidays. So I want to point out that, number one, the letter needs to be addressed to the specific contractor that you are reviewing the payroll for. If you see a name of a different contractor on there, you need to question it. You need to reject the payroll, ask for clarification. You know, it may be that they have a parent company that they've listed that they've just uploaded that USDOL approval letter for, but that doesn't necessarily mean that's approved for that specific contractor. So first step, the names need to agree as far as the contractor and who's listed on the approval letter. Second part is the last line of the first paragraph is going to always tell you specifically the type of fringe benefit that is being approved. So make sure it is the exact type of fringe benefit that you're seeing reported in the fringe benefits section. If it's not, or if they're claiming an additional fringe benefit that also requires a USDOL letter, I mean, it might be that they need to upload 2 letters for you. So you've got to have a letter for each type of fringe benefit that is requiring USDOL approval. Now, obviously, you need to read on into the letter. It will actually tell them whether it's been approved or not. So don't just see the letter and say, oh, it's approved, because read on. It might be that there's an exception and that it wasn't approved. Okay. A8, the beginning and ending date of the contractor's pay period as reported in the CFBS Section 6C and D agree with the pay period reported by the contractor on the certified payroll. So the CFBS is also asking them, when does your payroll period begin and when does your payroll period end? And then when do you pay your employees? So you're wanting to make sure that that information agrees with the way you're seeing the payroll come in. Because again, certified payrolls are on a weekly basis, a 7-day period. And then we're going to also talk about how the contractor needs to be paying no less than weekly, and then the requirement for timely submission. So it all starts with what the pay period is, and that needs to be accurately reported on the certified payroll. So contractors are required to pay no less than weekly and submit certified payrolls within 7 days of their regular pay date. These 2 requirements are driven by the underlying pay period and pay date of the contractor. So the CFBS is gathering up this information for you to make so that you've got it when the very first payroll comes in. So for example, in this example here, the contractor's pay period was 9/19/22 to 9/25/22, so a Monday to a Sunday. Again, the pay period must be a 7-day period. There's no exceptions to that. And then the contractor has said that they're paying employees on 10/7/22, so the following Friday. Now, each employee line on a payroll has a place for the contractor to indicate the date that the contractor actually paid that employee. And generally speaking, the pay dates on a payroll should really all be the same and agree with what the contractor reported as the regular pay date. But there obviously things happen. There can be some exceptions. maybe for some reason they paid one employee a day earlier or a day after. For the most part, you won't see that. But it is important for you to know that that pay date can be entered differently for each employee. So make sure you're scanning the payroll, looking at those pay dates holistically, because that is a manual entry that can be changed by the contractor. And then, any exceptions to that might be a red flag that you need to further investigate. I think one thing we want to make sure everyone understands is that there's nothing wrong with rejecting a payroll. If you aren't sure and you cannot confidently accept a payroll, rejecting a payroll is a way of communicating with the contractor to say, hey, I need more information. And it may be that it's all okay. And if it is, and they can respond in the administrative notices in LCP, or they can upload the additional documentation that you need, it's just a way to fine tune it. Now, obviously, if there is a major problem, rejected payrolls also keep that on the radar for everyone for further correction. But again, don't be scared to reject a payroll. It's just a way, an electronic platform to say to the contractor, I'm not sure, I need you to clarify something or give me some more information to feel confident in accepting this payroll. Okay. A9 says the regular pay date reported in CFBS Section CE agrees with the pay date reported by the contractor on the certified payroll. Again, this is just showing you in the view here that the system does not automatically populate the pay period for each payroll submission. The contractor must tell the system what the work week ending is, as well as when they actually paid the employee. And you want to make sure that that's agreeing with that regular pay date. Item A10 says the certified payroll is correctly numbered based on the week ending sequence of the certified payrolls, including no work payrolls. This is a requirement by USDOL that the certified payrolls be numbered in a sequential numbering sequence. This includes any no work payrolls that are reported, because again, LCPtracker, no work payrolls are required, and LCPtracker does give them the option of entering a no work payroll. The system does not automatically number the payrolls when entered by the contractor. This is a manual entry by the contractor, and sometimes they do make mistakes. And if this happens, the payroll should be rejected and returned to the contractor for correction, stating that it got out of sequence. So the payroll itself actually reports the payroll number, and then you can also see it on the dashboard. So when you're if you filtered for a contractor's payrolls in LCP on the dashboard, you can quickly see if they got out of numbering sequence or not. So that's a great tool to use, using that dashboard. I mean, because you're going to be able to see payrolls even if you've accepted or rejected them, and you're going to be able to see the sequencing. So that is a valid reason to reject a payroll for correction. A11 says the contractor made payments to employees no less than weekly. This is a requirement. It is not an option. And contractors that are new to certified payroll reporting actually do not always understand this, that they hear it, but then sometimes they try to cram payment of a biweekly payroll into this weekly payroll reporting, and it just doesn't work. They may be in the habit of paying employees biweekly, and they just don't understand that while they're required to report weekly, they're also required to pay weekly. And if they're currently using a biweekly payroll process, they're going to have to change that for those laborers and mechanics that are subject to Davis-Bacon reporting. Now, they may elect to run two different payroll runs. They may say, hey, we've got our administrative staff who aren't, actually working on the jobs, and we want to keep paying them biweekly. That's fine. But for those that are subject to Davis-Bacon reporting, they're going to have a separate payroll run and pay them no less than weekly. Even though, again, they may be certifying to weekly reporting, they may still be trying to do a biweekly payroll and fit that in. So let's talk about some red flags. How would you know? So one way to find this out is during a labor interview. When the employee being interviewed, they're specifically asked this question. Another way is looking on the face of the certified payroll under the all projects. So remember, under the column that says this project, this is only for the hours worked on the specific CDOT project, but all projects represents the employee's gross wages for the entire pay period. So in this example, while the employee worked 8 hours on the CDOT project, they were paid a total of $2,697.50 for the whole week. So I included on this slide some basic math to let you see how really this is an unreasonable situation. So at an hourly rate of $26 an hour, the employee would have received gross wages of $1,040 for the first 40 hours. And then they would have had to have worked 42.5 hours in overtime to actually earn this gross amount in a week. Because the overtime rate would be $39 an hour, which is 1.5 times the $26. So in this situation, this is actually a real situation where it turns out the contractor was paying biweekly. But you can see just how having an overall awareness in looking at the payroll from a reasonableness standpoint can throw up a red flag for you. So if you as the reviewer are not sure of what you're seeing, reach out to the Region Civil Rights Office. You can reach out to all of us, ask the question. And, you know, also, if you're not sure, you can reject the payroll and state the reason for the rejection is being that there is a concern that the contractor may not be paying weekly. And in order to validate that, when you do the rejection, request a copy of the pay stub be uploaded into e-documents, because the pay stub for that employee is going to clearly show the period of payment, and it's going to clearly show the total number of hours worked, which is then going to help clarify whether that was a weekly payment or a biweekly payment. Okay, now, if you have that situation where they are actually paying biweekly, then the contractor is going to have to modify their payroll process. They should submit a letter on their company letterhead acknowledging their noncompliance with paying weekly and state the changes that they've made in their payroll processes to correct the situation and when those changes will be effective. The contractor is going to need to provide pay stubs for the first payroll after they've activated that. So that you as the reviewer can confirm that they're now in compliance and paying weekly. So not paying weekly is a direct violation of Davis-Bacon Act, and it cannot be allowed to persist on the project. It has to be stopped, and they have to make the change to paying weekly. Okay. So moving into the next section, we've wrapped up CFBS. It's a big section. It's a deep dive to start off with reviewing the payroll. But really, everything starts with a CFBS when the contractor's getting started. It's telling you holistically how the contractor pays their employees. And you need to know that because that should then permeate through all the other payrolls that you're seeing coming in. So moving on to section B, timely submission. And B1 states that the certified payroll was submitted within 7 days of the contractor's regular pay date. So this is verbatim a requirement by the Copeland Act. They have to submit those payrolls within 7 days after the regular payment date. However, in LCPtracker, a payroll isn't available to CDOT for review until it's been prime approved. So since CDOT owns the LCPtracker system, they are actually allowing the payroll to be submitted into LCPtracker by the sub within 7 days of the contractor's regular payment date, and then allowing the prime approver, meaning the prime contractor, 7 days to review and prime approve the payroll. Then at that point, that opens it up so that CDOT representative can see the payroll and actually review it. So in this example here, we've got the payroll period being from January 4th to January 10th. Then assuming they're paying weekly, they would be with a pay date of 1/16. Then they would need to submit the payroll by 1/23, 7 days later, and then they're given the prime 7 days to actually prime approve it. So you can see it's basically 3 weeks that they're allowing from that payroll period to allow it to open up for review. Moving into section C, daily field activity. Item C1 states the activity reported by the contractor on the certified payroll does not conflict with activity reported on the daily field report. So why is this important? Well, if you remember in Davis-Bacon, we're monitoring laborers and mechanics on the site of work. So in order to properly monitor payroll reporting, we need to know what's going on in the project and who is on the site of work, really to even know what payrolls we should be receiving or whether the information being reported on the payroll is accurate. So daily field reports should be being prepared to document project activity, including subcontractors that are on site. However, daily field reports are not always 100% complete. Therefore, we really can't say that the certified payroll should always agree with the daily field report. For example, what if the certified payroll reported activity on a Thursday by subcontractor X, but the daily field report only reported subcontractor Y and Z? It doesn't mean that subcontractor X was not on site. It most likely means that the inspector didn't see subcontractor X. And really, depending on the size of the project, if you've got a several mile long job, that could happen very easily. So we're wanting to make sure that what's being reported on the daily field reports is at least being reported on the certified payroll. So, however, if the daily field report shows that subcontractor X was on site on a Wednesday, but the payroll didn't report any activity for Wednesday, then that is a basis for rejecting the payroll. And your rejection would actually state that contractor X was observed on the site of work on this date by the inspector. However, field activity was not reported on the certified payroll for that day. And then the contractor is going to research their records to see if they missed reporting activity for that day. Or, they may have documentation that confirms they weren't on site that day. It might have been an error on the case of the inspector. And in that case, you'd follow up with the inspector and really to resolve any discrepancy. So again, it's about making sure that everything is shored up across your project documentation and what's going on in the field and what you're seeing coming in on certified payrolls. Because just to think of it from this standpoint, that stepping foot onto the project triggers compliance reporting, and that's what we're wanting to make sure of. Section D covers wage classifications, and D1 states that workers reported on the certified payroll include at least one skilled laborer or otherwise a foreman is on site to supervise unskilled laborers. The concept behind this is that typically general laborers are not skilled workers. So someone on the project should be able to direct the work. That may be a skilled worker or it may be a foreman. And just remember that working foremen are only required to be reported on a payroll if they are working in the capacity of a laborer mechanic for more than 20% of their work week. So that being said, they may be on site, but they may not be reported on the payroll. So if you're not sure, check the daily work report or ask the inspector on site if that contractor has a foreman that's usually out there. It's really all about having awareness of what's going on with your project and communicating with the project team. D2, workers are reported in wage classifications that generally agree with the scope of work that the contractor is authorized to perform on the project, as per the 205 that was submitted in B2G. So in this example, we've got company XYZ, and they're a trucking firm. So if you saw a payroll for this trucking firm that was reporting workers in a classification for a paver and a backhoe, you would want to question that because it would seem that they're working outside of their scope rather than running trucks, which is what the 205 was approved for and is their the activity that they should be providing on the project. Moving into section E, which covers wage rates. E1, the proper wage decision is used based on the highest wage for each specific classification for all counties on the project. So if a project limit spans across 2 counties, it may cause 2 wage decisions to apply to the project, depending on the specific county and which counties are reported or included on which wage decisions. So in those cases, It is stated on the wage decision that when work within a project is located in 2 or more counties and the minimum wages and fringes benefits are different for 1 or more job classification, the higher minimum wage and fringe benefits shall apply throughout the whole project. So in this example, we have a project that has work in both Clear Creek and Summit County. Now, because of the grouping of the counties in the wage decision, this causes 2 different wage decisions to apply. Looking at the carpenter classification that excludes formwork, the rates for Summit County would apply to the whole project because in the total required minimum rate is $36.82 versus the total hourly minimum required minimum rate for Clear Creek is $24.35. So the Summit County rate would be used across that project holistically for the carpenter excludes formwork position. E2 states that laborers and mechanics are paid at a combined rate, cash, fringe, or both, that meet the local, state, and or federal minimum wage requirements. So effective for 2023, the federal minimum wage is $7.25 an hour. The Colorado minimum wage is $13.65 an hour, and the city and county of Denver minimum wage is $17.29 an hour. So let's take a little closer look at how these minimum cash requirements impact projects with Davis-Bacon applicable. Here we're looking at a wage decision for Denver and Douglas counties. So in this example, the cash wages of $16.76 and $16.29 for Denver and Douglas respectively on the wage decision, they both meet the federal and the Colorado minimum wages of $7.25 and $13.65. But if the subject project was in Denver, the cash wage of $16.76 would not meet the minimum cash rate of $17.29 that's required for Denver. And the cash rate would have to be increased to the minimum of $17.29. Now, since the total minimum required rate on the wage decision is $23.53, and the cash rate is being increased to $17.29, this means that the fringe rate would actually decrease to keep the total required rate at the $23.53, same as the wage decision. Now, obviously, the minimum required rate for Denver County does not impact a project in Douglas County. But note that here we've pointed out to you that CRBRC is looking at these minimum wage requirements when they're setting up the wage decisions in LCPtracker. Okay. E3, overtime is correctly paid at 1.5 times the hourly base rate plus 1 times the hourly fringe rate in accordance with the prevailing wage decision. Now, the Contract Work Hours and Safety Standards Act, known as QASA, requires that laborers and mechanics shall be paid wages at a rate not less than 1.5 times the basic rate of pay for all hours worked in excess of 40 hours in any work week. The basic rate of pay may be higher than the cash rate in the wage decision, and if so, then overtime must be paid at 1.5 times the actual basic rate of pay. So we've given you some examples here, and in example 1, the basic rate of pay equals the cash rate on the wage decision of $26.50, and therefore the overtime is paid at $39.75, which is 1.5 times that rate. But in example 2, the basic rate of pay is $30 an hour that the employee is being paid. While that is higher than the cash rate on the wage decision, the contractor is required to pay at 1.5 times that basic rate of pay of $30, causing the overtime rate to be $45 an hour. Okay. So section F, moving into deductions, F1 states in other deduction notes, each deduction is listed by both type and dollar amount. All other deductions are required to be listed by both type and dollar amount. This is a requirement by USDOL. It is not an option. So we've shown you 2 examples, and in the compliant example, you can see that all the deductions are listed by type and dollar amount. However, take a look at the non-compliant example and see if you can see what's wrong in this section. Okay, so the 401k is listed as a percentage, and there is no amount for the dental. Now, unfortunately, LCPtracker does not check this area. It is a manual check that must be conducted by the reviewer. the field that contractors use to actually list this information is like a Word document. So they must manually type this information in. So you can see that sometimes there's mistakes because if deductions for an employee change across a week for a particular employee, then a lot of times the contractor might forget to update this section. So there may be mistakes. So you just need to have an awareness of that. This is not necessarily a download, a dump from their accounting system. They're having to manually update this in the reporting. So you do have to check this very closely, making sure that everything is being reported properly. Now, the reason that this information must be listed out is to make sure that the deductions being taken are actually allowable, because as we're about to look at a little bit closer, not all deductions are allowable on a federal aid project. And while they may be allowed, depending on the type of deduction, supporting documents may be required that should agree with the amount being deducted. So if the information wasn't detailed out by type and amount, the reviewer would really have no way of knowing, what they should be further questioning or what they should be looking for, or even to say, hey, this is not an allowable deduction. Okay. Now, all F2 states that all individual other deduction amounts reported in other deduction notes cumulatively equal total other deductions. So the total of the other deductions listed out must equal the total other deductions amount that then calculates into the net pay. This lets the reviewer know that the contractor has reported 100% of all the other deductions that are being taken. A super handy report is the other deductions report. This data pulls directly from the certified payroll, but some people think the view of this report makes it easier to quickly review deductions for completeness and reporting. So like, you can pull this report by a specific contractor for a certain period or date range. You can also pull it for, let's say you pulled it for all of a particular week, and then it's going to dump that information grouped by contractor for that time period. So for example, the first line here is an issue because the contractor listed other deductions totaling $146, but they only provided detailed information totaling $100 for child support. So the question here becomes, what is the other $46? Is it, and what type of deduction is it? Is it allowable? Is it unallowable? You don't know because they obviously didn't report all the deductions to you. So that in and of itself is a basis, a reason for rejecting the payroll. F3 states that each individual other deduction represents either an allowable deduction or an approved deduction by USDOL as outlined in 29 CFR Part 3.5 and 3.6. So examples of permissible deductions that don't require USDOL approval. So if you see them, the deduction, it's okay. Federal, state, or local taxes, prepayment of wages without discount or interest, court-mandated deductions, funds established by an employer for health insurance benefits, pensions, savings account, unemployed benefits, union dues. Now, some examples of deductions that require USDOL approval, some common ones we see are uniforms, cell phone, iPad, tablet insurance. This is where they're letting them use a cell phone, but then they're requiring the employee to pay for the insurance. Tools, headsets, gym memberships, rent. So all of these require USDOL approval, and the contractor needs to write into the USDOL explaining how the plan works, and then USDOL will make a determination as to whether it's allowable. If you're not sure, ask CDOT. And I can assure you that, even after all the years that I've been doing this, it's amazing to me some of the things that I still see as deductions, like I'll tell you one, we saw a deduction for steak. Turns out that the contractor owner also owned a steak company and was allowing the employees to buy some steaks, and they were just deducting it from the paycheck. That's not allowable. So you just never know what you're going to see. And so if you're not sure, reach out and we'll certainly help you. It's better to ask than to not ask. And again, we've seen some really odd deductions over the years. Now, for deductions that require USDOL approval, the deduction must meet certain parameters in order for USDOL to consider it for approval. And when the contractor is submitting their request letter to USDOL, they're actually required to state these specific requirements verbatim in their letter in the USDOL approval request. Item A, that the contractor, subcontractor, or any affiliated person does not make a profit or benefit directly or indirectly from the deduction, either in the form of a commission, dividend, or otherwise. B, the deduction is not otherwise prohibited by law. C, the deduction is either 1, voluntarily consented to by the employee in writing and in advance of the period in which the work is to be done, and such content is not a condition, such consent is not a condition either for the obtaining of employment or for the continuation of employment, or T, or 2, provided for in a bona fide collective bargaining agreement between the contractor, subcontractor, and representatives of its employees. And then D, the deduction shall serve the convenience and interest of the employee. So they've got to actually say that when they send their request letter to USDOL. Okay. Now, to view supporting documents that are required in LCPtracker, go to e-documents. You're going to select view documents, and then you can filter by the project, contractor, assignment, the document type, date range, the employee name. You can also click on the column headers for further filtering based on the data. But just always remember, after you choose your selections, you've got to always hit load data for the screen to refresh with the information that you're looking for. Item F4 states that supporting documentation is on file in e-documents for the specific type of deduction reported that requires further support for the named employee and accurately supports the reported deduction. Now, we've included a reference here to the CDOT guidance on deductions for construction projects requiring certified payrolls. This was updated in June 2021. It's available online. We also sent that out to you in the attachments today, and it's available as one of the attachments here to the presentation. And this is CDOT issued guidance on the supporting documents that are required for certain deductions. Now, one of the common deductions discussed is for loans and cash advances. This is when the company has advanced an employee money, and it may be called a loan or it may be called a cash advance. That may be how you see it detailed out. Here, the guidance explains that deductions for loans and cash advances shall include a written agreement between the company and employee. And the written agreement must include 1, the total amount advanced, the date the funds were advanced, the dates in which funds will be deducted for repayment, the amount that will be deducted on each date, the employee's name and signature authorizing the deduction, and a statement that indicates that no profit or other benefit is otherwise obtained directly or indirectly by the contractor or subcontractor or any affiliated person in the form of commission, dividend, or otherwise by way of the funds advanced. So we've included here an example for documentation for a loan that we got. Here you can see you've got the contractor's name, who is making the loan, the name of the employee, the amount of the loan, the amount to be withheld, the number of pay periods across which the payment will be withheld, the date range of the deduction periods, the date of the loan, and the employee's signature. And from here, we can also tell by the number of pay periods and the amount to be held that there's no interest being accrued on the loan, because the 2 payments of $101.93 equal the total of the loan for $203.86. Another more common deduction is for uniforms, and here's an example of a USDOL approval letter for a uniform deduction. So just like when we were talking about they had to have the USDOL approval letter for the unfunded benefit plans, here's a letter for USDOL deductions, and you got to make sure that what you're looking at is what aligns with what you're seeing on the payroll. So you want to make sure that the letter is issued to the contractor who is named in the payroll. Also, the last sentence of the first paragraph always states the specific type of deduction being addressed. And the type of deduction should be the same type of deduction listed on the payroll. And if they have more than one deduction that requires a supporting USDOL approval letter, then you need to have an approval letter for each type of deduction requiring approval. So you may have more than one. The second paragraph restates the CFR requirement on which the department is basing their determination for approval. And that's also, again, those same parameters that the contractor has to state specifically in their request. The reviewer will also need to take note of the effective period of the approval. So approval letters are only good for 1 year and must be renewed annually by the contractor. So while the contractor can request that the approval be for a retroactive period in their initial request, it is typically not approved. We usually don't see that. In my time, I've seen one in which they actually did it. They didn't take it back as far back as the contractor asked for. You have to really take note of the time period that they're approving it for. So again, for this one, it's saying that the approval is for a period of 1 year from the date of this letter. So what does this really mean for you as the reviewer? Well, if you're reviewing a payroll and you see a deduction type that requires USDOL approval, you need to check to see that the approval's been uploaded into eDocuments, then check these key areas that we've pointed out. If the company does not have a USDOL letter, when you're reviewing this payroll and you see that, hey, here's a deduction that requires approval, I don't see an approval letter in eDocuments, they need to go ahead and ask for the approval letter and submit the request for approval. And again, if the approval, when it comes back, does not cover the period of the payroll in which the deduction was taken that you're reviewing, the contractor will be required to reimburse the employee for the unallowed deductions that were taken. So that payroll should be rejected in LCPtracker. The contractor will owe wage restitution to that employee. Evidence that the employee received the restitution will have to be provided and uploaded into eDocuments, and then a supplemental payroll will need to be submitted into LCPtracker for the affected week, reporting the net effect that the reimbursement had to the employee for that week. And we're going to talk a little bit more. I'm going to give you an example of what a resubmitted payroll would look like when you've got a wage restitution that's been paid. Okay. G1, let's talk about independent contractors. In G1 states that separate certified payrolls are submitted for each independent contractor, including trucking firms, and has an approved 205 in B2G. 1099 contractors are not allowed to be reported on the payrolls of the upper tier contracting firm. Now, an independent contractor is a separate legal entity that's working on behalf of another separate legal entity as a subcontractor. And there really seems to be a lot of confusion around this concept. And just like it stated here in the notes of this payroll, this was an actual payroll. They've listed here in the notes 1099 employee. Well, to clarify, there is no such thing as a 1099 employee. You are either working as an employee for a company and receive a W-2 at the end of the year, or you are an independent contractor and you receive a 1099 at the end of the year. And that's really the main way to differentiate between whether someone's an employee or an independent contractor. Now, an independent contractor can be a company, or they can be a single person operating as what the IRS refers to as a sole proprietor. Either way, they are not an employee of that company, and they do not receive a W-2 at the end of the year. They are a subcontractor, and all subcontractors are required to be reported into B2G via a 205 to receive approval to work on the project. And in turn, if they're subject to Davis-Bacon, they must report on their own certified payroll. Now, some red flags to look out for on a payroll to help identify independent contractors that may not be reported correctly. In this case, they actually said it in the notes, 1099 employees. So that was an obvious, red flag on this particular payroll. But also, An independent contractor will not have any Social Security or Medicare taxes being taken out because, again, they are not an employee of the company. So you can see in this case also, they didn't have any taxes being taken out. So both of those red flags were evident when reviewing this payroll. So in this case, the payroll should be rejected and the issue explained. A 205 will need to be submitted into B2G for this particular subcontractor. They'll need to be set up into LCPtracker upon approval, and then they'll need to submit their own certified payrolls in LCPtracker under that assignment. G2, independent contractors, including trucking firms, are denoted in LCPtracker with the designation of owner-operator. So owners of an independent contractor should be noted in LCPtracker with the designation of owner-operator. They are then required to report hours that they've worked, but they're not required to report any rate or pay information. And the reason behind that is that they're the owner of the company. They may not actually receive a paycheck, but they are required to report their activity on the project and complete an affidavit certifying to their ownership and management of the company for compliance with Section 541 for independent contractors. Now, let's say that an independent contractor, the owner is actually working on the project, but then they may also have employees. So if you have that scenario, you're going to have a hybrid payroll that'll have a line item for the owner reporting them as owner operator, and then you'll have a supporting affidavit for that operator in e-documents. But then you may have a second, third, or fourth line for the employees of that company who are actually employees. So keep that in mind, that you may have a hybrid if the owner of the company is actually performing work alongside their employees. G3. An owner-operator affidavit is on file in e-documents for owners of independent contracting firms, including trucking firms, affirming that they own more than 20% of the company and participate in the management of the company. So the owner-operator affidavit is used to document owner status for both owners of a company that may be working on the project themselves or truck owner-operators who own the trucks that they're driving on the project. Both types of owners must still certify that they own more than 20% of the company and participate in the management of the company. But when they're filling out the form, if they are also a truck owner-operator, they must also complete the bottom portion of the form as well. The form then should be completed and uploaded into e-documents. Now, G4 states that for trucking firms, they need to complete the owner-operator affidavit. So the owner-operator affidavit is on file in e-documents with each truck driven on site listed and a valid driver's license and current vehicle registrations attached. So in addition to completing the top portion of the form, the truck owner-operator must list the VIN numbers of the trucks that they're going to be driving on the project. They also must include a copy of their driver's license, as well as an active vehicle registration for each truck that's been listed. And these need to be uploaded as attachments in addition to the owner affidavit, all uploaded into e-documents. All right, let's talk about on-the-job training apprentices. So H1 states that employees reported in an OJT training classification have a CDOT approved Form 838 on file in e-documents and are reported in the correct training classification for their training level. So, you know, as you're reviewing a payroll, you may not have any apprentices depending on if that contractor is doing training or not. But if you do, and you see an apprentice on there, when reviewing the payroll of a company that has a trainee, you'll need to ensure that the trainee is being reported in the correct classification based on their current training level. So now as trainees increase in their training and their level increases, a new Form 838 is supposed to be submitted for approval each time the trainee increases in their training level. And then region and headquarters assures that the appropriate training classification is available in LCP for payroll reporting. Because the union rates change frequently, the classifications title typically includes an effective period for the rates for each training level. So here's an example where we've shown you how the classification that's approved should correspond with the most current Form 838 approval that's on file for that trainee. And Remember that after 838s are approved, they're uploaded into e-documents, so you can always access them there. H2 states that the apprentice ratio to journey level workers does not exceed a 1-to-1 ratio on the certified payroll, or a working foreman not reported on the payroll is verified as being on site during training hours. So the CDOT specifications require a 1-to-1 ratio. And let's look at a couple of examples here that we've given you. So in example 1, we have 1 foreman, 2 apprentices, and 4 general laborers. And since general laborers are not considered to be skilled journeymen, our ratio here is 2-to-1. So in this scenario, the contractor is not in compliance with that specification. In example 2, we have 1 foreman, 1 apprentice, and 4 general laborers. So our ratio is 1-to-1, and we have compliance. In example 3, we have 1 apprentice, 1 skilled worker, and 2 general laborers, and the ratio is 1-to-1. So again, we're in compliance. And in example 4, we have 2 apprentices, 4 general laborers, and 1 skilled worker. So the ratio is 2-to-1, another non-compliant scenario. So now let's talk about accepting and rejecting certified payroll records. Item I1 states that if the CPR is found to be in compliance, the reviewer has selected accepted under accept status in LCP. And again, reminding you here where that occurs at in the drop-down menu for each line. If the CPR is found to be in non-compliance, the reviewer has selected rejected under the accept status in LCP and entered the following information into the rejected administrative notice in LCPtracker. 1, the date rejected. 2, the week ending date of the rejected CPR. 3, the name of the person rejecting the CPR. 4, the reasoning for the rejecting and the non-conforming work issue. 5, the correction action to be taken by the contractor to resolve the issue. 6, the deadline for resolution to be within 7 days of the notice date. So you don't want to let it lay out there very long because, again, payrolls are coming in every week. And so if you have an issue, you want to have a date for a resolution to be within 7 days, hopefully before the next payroll comes in, so that if you don't have a compounding effect. Now, the other reason for including information like the date, the weekend, the name of person is because if you choose to run some reports in LCPtracker, 1, it makes it very clear that it's all included in that notice they're receiving, but depending on the views you're seeing, some of that information is not necessarily automated in LCPtracker. So if you put everything in the actual rejection notice, you've always got that information very quick and handy right there in front of you, depending on where you're looking at it. Now here we've included an example. Now when you hit rejection, in the drop down, there's going to be a pop-up blocker that comes up. So a box comes up and says, hey, do you want to write about what's wrong with this payroll? And that's where you want to fill out that box. Now, literally, just like we've shown you here in this example, it's a little square box, and you have to put that information within there. So we have I think 2 trainings out. We have another training coming up on project tracking. And one of the tools we're going to share in there is a way to maintain an ongoing list of what payrolls you've rejected. No doubt there's some reports in LCPtracker, but we do have a tool, an Excel spreadsheet, where you can easily keep up with the payrolls you've rejected. So it makes it easier sometimes to write your rejection notice over in this other area and then copy and paste it into here, because once you do this, you'll see it's a real small box. It also kind of lets you filter then to know big picture, what all payrolls have I rejected and for why. It may let you copy and, rather than totally rewriting a rejection, let you use some of that previous version. Also lets you look at trending analysis across your contractors on your project. So make sure you sign up for that one too. Really good information to enhance the information we have in LCPtracker, just to be able to make it a little easier to manage your project and the oversight. So again, when the rejection is selected, you're going to get a pop-up box, and then that's where you're going to include this information on the rejection notice. So resubmitted payrolls. J1 states that for resubmitted certified payrolls that require wage restitution, supporting documentation is on file in e-documents to validate that the correct amount of wage restitution was received by the affected employee, not just paid, but received, including copies of bank cleared checks or cash affidavit and any necessary supporting calculations. Certified payrolls have been resubmitted to reflect the net amount received by the employee after wage restitution was paid. So let's take a look at an example here. In this example, we have a uniform deduction. But let's assume that the contractor did not have USDOL approval. And while they eventually might have gotten it, let's say they didn't receive it retroactively for the payroll that you were reviewing. So in that case, as we previously said, the contractor will be required to reimburse the uniform deduction back to the employee for this payroll. So in this instance, they would need to make payment to the employee and then upload a copy of the bank clear check to e-documents that clearly showed that the employee actually received the payment. It's not just about paying them, it's about them actually receiving it. Then the payroll would need to be resubmitted in LCPtracker. So now let's take a look at how that payroll would look when it's been resubmitted, okay? So in this case, if they had to pay back the uniform deduction, the $4.85 was paid back to the employee on the, what would that look like on the supplemental payroll? So I've got a set up here so you can see what the original CPR looked like and then what the supplemental CPR looked like. And I want to clarify that we refer to a supplemental payroll. This is nothing more than a revised payroll. A lot of people get really confused about this and they're like, okay, does the contractor need to do a complete new submittal into LCPtracker? No. When you reject that payroll, the contractor is going to go in and then update the information on that same payroll to now reflect the fact that they previously paid the employee a certain amount, but now they've reimbursed them for this uniform deduction. So for that particular week, now the employee has received $4.85 more than what they originally received, and the certified payroll needs to reflect that. So in this supplemental payroll, the uniform deduction was removed from the other deduction notes, right? Because it's no longer a deduction, the employee actually got that money back. Total other deductions went down by $4.85 to now be $227.43. Total deductions went down by $4.85 to $508, so $508.11, which means then net pay went up by $485 to now be $1,111.89. Also, now that they've technically paid that employee twice for that particular week, a lot of times you'll see them add that secondary check number and pay date in those fields. And that's okay, because again, the documentation trail is there to show that they paid them wage restitution. Item J, if resubmitted certified payroll is reviewed with all previous issues identified in the rejection notice resolved, the reviewer has selected accepted under accept status in LCPtracker. So if they've resent everything in, all the documentation looks great, you've turned back around, making sure you've then turned back around and hit the accepted button in the status. However, if the information they sent in was still wrong, you're going to reject the payroll again, and you're going to explain to them second, third, however many times it takes, what is still wrong with the payroll, and so that how they can get it fixed. And then even if additional information needs to be uploaded, you're going to reject the payroll and explain that. So a lot of times when a payroll is rejected, a contractor might come back and say, well, you've introduced new things onto this rejection that, you know, now we've got new things we've got to change. Well, sometimes that's true, because sometimes when a contractor resubmits a payroll, they actually change the information, which now causes other things to possibly be wrong when you're reviewing the payroll. So have that awareness. When you're reviewing the payroll, you really should review everything, because they could change anything on that payroll, and it might now cause other items to be in non-compliance. So keep that in mind when you're reviewing, and it is acceptable to reject a payroll for more than one time. We just want to remind you about reports. There are a variety of reports that can be accessed depending on the type of data you're looking for. All the reports can be exported to Excel, which then allows for further filtering of the data or printed to PDF. Again, one of the more useful reports is the Enhanced Query Project Summary Report. And this report includes everything that there is to know from the system about a particular payroll submission. It can be ran for all contractors, a specific contractor, or a certain date range. Any notes or rejections, anything that you've put in the system about a payroll is going to all show up in this report. So super handy report. Don't forget about it. And again, we sent out to you as an attachment this guidance for frequently asked questions on certified payrolls that CDOT has posted online. We're also providing you the link here. Use it. If you have any questions, let us know. Well, it looks like that we've only got one question. So either I did a really good job or else I've got you really confused. So hopefully it's because I did a really good job. So our question today is, what if you have random employees, not all of them, on each payroll who do not have federal taxes taken? It is random and on almost every payroll. Do I audit? If you are functioning in an oversight capacity, you always have the right to audit the payroll. The fact that there are no taxes taken out might increase the likelihood that it is fully audited. However, CDOT's not the IRS, and we won't reject the payroll simply because someone did not have federal taxes taken out. And in a case like this, would be looking really at the same elements. Does this meet and follow the requirements as outlined by DOL? So I want to point out that when I was going over that section, did you notice that I did not mention federal taxes, federal withholding taxes? I only mentioned Medicare and Social Security taxes. So again, if you're not sure, ask, communicate, but typically in an employee environment, you're going to always have Medicare and Social Security taxes taken out. However, based on exemptions that someone may have reported on their W-4, they may not have federal withholdings taken out. So I don't know if that's part of this question, but I did want to clarify that part of it, okay? I think that's all of the questions we've had come in at this time. Monica, was there anything else that you'd like to speak to about today's training?
No, it was great. Great information. Thank you, Marla. But no more questions. I think we got all of them.
Great.